An aviation union said on Thursday, while launching a public campaign against the practice before the U.S. airlines resume share buybacks, they should invest in their workers and fix their operational issues. As part of the federal COVID-19 relief package, airlines have been prohibited from buying back their own shares. The ban, however, is set to expire at the end of September. Okay, let me get more insights into these headlines as we cross over now to London to speak with the FXTM Senior Research Analyst, Lukman Otunuga. It's good to see you, my friend. It's been quite some time. Great to get back together on the show.
It's great. It's been a pleasure.
Great to be back. Rotus yielded the seat to me today, so it's good to see you here on this side of the GBR. Okay, let's start with Far East. Let's go to Asia first. What do you make of the latest inflation numbers out of Japan? What does that mean for the BOJ?
It's interesting because after many years of chasing inflation, it seems like inflation has presented itself to Japan. I expect the Bank of Japan, Japanese yen, to be in the spotlight moving forward because by Japan standards, the core inflation of 2.4% is pretty hot. I think moving forward, as the yen continues to weaken and pushes the price of imports, this is going to result in companies pushing their costs towards consumers. So Japan is going to actually experience a consumer squeeze. And the scary thing here is that it usually takes 6 to 12 months for the impacts of inflation to be fully reflected, meaning that inflationary pressures are likely to rise further in Japan, forcing the Bank of Japan to take action. According to Bloomberg, the probability of the Bank of Japan doing anything in regards to rates is quite low. But if it starts to impact economic growth, don't be surprised if the Bank of Japan removes its ultra-accommodative stance towards monetary policy and joins the hawks sometime in 2023.
Okay, so let's take that to the currency space. What does that mean for the Japanese yen, which shows some weakness against the greenback?
So on paper, the fact that the Bank of Japan should be joining the Hawks camp should be bullish for the Japanese yen, but there's two words, yield differentials. We know that the Bank of Japan has, capped the 10-year yields in its country compared to others. If you look at yields in the US, yields are paying 2.9%. In the UK, 2.4%. In Europe, 1.76%. But in Japan, 0%. So as long as there's a cap on yields, the yen is likely to remain weak against the dollar and other G10 currencies until the Bank of Japan makes a move.
I don't know what's going on in Turkey. I'm sure you remember Turkey have seen so many central bank governors come and go, so I've lost count at this end. So help me out, my friend. So what do you make of the rate cut by the Turkish central bank? What is President Erdogan trying to achieve?
I'm trying to choose my words wisely, but it was quite comical, and it really shocked markets. Well, we're seeing central banks across the world, even Nigeria, trying to put out this raging flame known as inflation. It looks like Turkey is, adding fuel to the fire. By cutting interest rates, by 100 basis points, despite inflation sitting there 80%, this is likely to result in further inflationary pressures, pulling the economy in a more uncomfortable position. We can already see that the lira has shed over 25% against the dollar year to date and plunged 80% against the greenback in the last 5 years. What Turkey's central bank has done is likely actually exposed its economy to more downside pressures, despite its intent saying that it wants to, stimulate economic growth while ignoring the threat known as inflation.
Are we likely to see more weakness for the Turkish lira moving forward against its major competitors within the emerging market space? We talk about the Chinese yuan, and a few others in that basket.
Certainly, as we can see, fair enough that we saw the Bank of Japan, Bank of China also cut interest rates earlier this week, but still this was based on a different reason. China has got its own issues, but unlike China, Turkey's really facing that inflation beast, and the last thing markets expected for it to do was to do anything in regards to rates. So labor weakness is likely to remain the main theme across the emerging market space, and of course G10 currencies as well.
Okay, so what do you make of the current market week, my friend? It looks like we've got a bit of a breather in a manner of speaking. It looks like equities are trying to find their bearings, as it were. Inflation spectre, the R word is still there on the street. Whether it's recession, whether it's going to come now, it's going to come later. Whether the US Fed will be tapering much slower than earlier thought, or they're going to push it up. The jury's out there. On what side of the street are you, my friend?
Yeah, there's so much going on. It's like, many themes just lingering in the air. And it almost felt like this week markets were on standby. There was some movements across equity markets as, conflicting statements from Fed speakers on rate hikes, enticed or scared equity bulls and bears. We have to keep in mind we're in August, though. This is the summer trading mood and nothing much happens. But I think, quote unquote, you could quote me, this could be the calm before the Jackson Hole storm next week.
Oh, yeah, interesting. Yeah, the Jackson Hole. Just about whether they'll be able to talk up the currencies and the economy at Jackson Hole. But again, whatever, they got to play some. They got to play some polo, some whatever. Play time for sports. What about the dollar and the pound sterling, by the way, and the euro? Tell me about the interplay of these currencies as you see UK inflation as well, and a bit of concerns about the strength of the UK economy and what that means for the pound as well. Put these three major currencies together for me. What's your outlook at FXTM?
Certainly, I must confess, everyone makes mistakes. The dollar caught me off guard this week. I was armed with my fundamental knowledge and technicals, looking for some dollar hunting, but the dollar got me back. We need to keep in mind that there are three drivers behind the dollar's appreciation this year: interest rates, the strength of the US economy, and of course that the dollar is a safe haven destination. If you look at what's happened recently, inflation in the US has dropped 8.5%, and the US economy is in an official recession. So two of the three factors supporting the dollar are out of the picture, but we saw the dollar appreciate on Friday due to the fact that disappointing economic data in China fueled its safe haven demand. We can see dollar appreciate over the next few days ahead of Jackson Hole. Looking at the British pound, it's not looking too good. Inflation in the UK is at a 40-year high, 10.1%. Really, really terrible household squeeze. Two things. The Bank of England is going to be forced to raise interest rates in September, but as inflation continues to rise, this really creates a fog of uncertainty of the UK economic outlook.
Okay, let me squeeze gold and oil together into this final question. What's your take in terms of gold is currently trading lower, oil is also lower. So how do you get this movement as we go into the weekend and get to put the latest data from the API and the US drawdown into the mix?
Certainly. So I'll be quick on gold. With gold is heading for its first weekly decline in 5 weeks, all thanks to an appreciating dollar. But gold's outlook is going to be influenced by the Jackson Hole next week, depending on what Jerome Powell has to say. If he's hawkish, this will drag gold lower. If he's cautious, gold prices will push higher. In regards to oil, it's the same old picture. We've got conflicting forces, the Iran nuclear deal, more supply from Libya, China slowdown fears, just so many things in the mix. However, though, I still think that oil still is looking for a major directional catalyst, and this could come in the next few weeks, depending on OPEC or developments revolving around Biden and Saudi Arabia.
Oh, you've mentioned Jackson Hole twice in this conversation, or thrice, so I wish I could get there. But let's keep an eye on what the big boys are doing there, playing golf and just talking up the global economy. Thank you so much. Have a great weekend. Otunuga, Senior Market Analyst at FXCM.